Welcome back to Strictly Money. I'm here with Rosa Beemt and Nalini Feuilloley of BMO Global Asset Management. Nalini, I'll ask you this question because I think for viewers who are watching this and they want to invest, I certainly get this question all the time. How do they get started? What are some of the things that they need to think about?
Absolutely. So this is a really great question because sometimes to navigate this space can be a little bit overwhelming. And I think the one thing to know is that there's something for everyone within this umbrella of responsible investing. There isn't just one approach. So if you have, high conviction views as it relates to a thematic like climate change or even diversity, equity, or inclusion, you can work with your financial professional to say, are there funds, are there portfolios that actually reflect solving for some of these challenges? And so we have thematic funds here at BMO Global Asset Management that focus on those types of issues. And so the whole fund will be trying to move the needle on one ESG issue versus another. If you don't necessarily have high conviction values that map to certain ESG issues, you can just say, I want to invest with a portfolio manager, an asset management firm who's really taking into account all material E, S, and G issues because they are going to impact kind of the future growth of my investments. And I want to make sure that they're well informed and they know how to measure and value that risk. And so that is a concept that we call ESG integration. Make sure that you're doing your due diligence alongside your financial professional on who you're putting your money with to kind of mitigate that if your investments are especially for the long term.
Yeah, I think that one of the bigger concerns that I hear is they just want to make sure that their dollar is making the impact. Right. Is there something specific that they could be looking for or screening tools or?
Yeah, so I think that's a great point. Impact investing is a very defined space. So we're looking for not only a financial outcome, but a measurable social or environmental outcome as well. So you want to make sure that whatever product or portfolio that you're investing in that might have an impact label is actually holding themselves accountable and being transparent with the reporting on the impact that they are actually trying to make. So, you can have like a great name of a portfolio, glossy marketing slides, but you want to make sure that there is kind of some reporting that comes along with that, the kind of reporting you would expect on the financial side, but also for the environmental or social issue that particular fund is trying to tackle.
Yeah, makes sense. Well, let's run through some of BMO's offerings in the space, and we have a board, so we'll bring this up. Now, obviously, these are just a few of
Yes.
the many offerings that you have, and you have a mix of funds and ETFs. Can we just start with it's ESGG, so the BMO MSCI Global ESG Leaders Index, and this is an ETF.
Yes.
Who would this be suitable for?
So I think this would be suitable for somebody who's new to the space, right? You're looking at your assets. You might have an asset allocation plan in place from an equity perspective, and perhaps you have different benchmarks reflected in your current traditional portfolio. So you have an S&P 5 index, you have an EFA index, you have an ACWI index. So this portfolio would be suitable for somebody who wants to make a quick swap. So take out their traditional global exposure in equities and actually replace it with another global index that's actually prioritizing ESG performance amongst the companies reflected. And so I think it's a great starter way to get into the space to say, I want to invest in companies that are actually prioritizing sustainability while still getting the exposure that I'm looking for from an asset allocation perspective.
Okay. And there is another one. There's the Global Opportunities Fund as well.
Yes.
What's the difference? Why would someone pick that?
Yeah, so the Global Opportunities Fund is really more reflecting the skill of the portfolio managers managing that active strategy. So that fund is going to be a lot more concentrated in its positions, probably like 30 to 45 positions max, whereas that ETF that mimics the MSCI World Leaders Index is going to be a lot more expansive in terms of exposure. So one is a mutual fund that is being actively managed by portfolio managers, and the other one is going to be replicating the benchmark that MSCI has put forward.
Okay, and we should remind people there's balanced funds as well. There's a mix of equities as well as fixed incomes for those who are a little bit more risk averse. And we'll bring up the QR code again. Let's bring this up because for any of you who are looking at funds, you can go again to the responsible investing site, the page for at BMO, and pull up the fund fact sheets because that's important. That's where all the details are.